All right, what's up, guys? What's happening? You know, I wonder what would happen if I actually gave you guys a heads up about this session. Oh man, if there's one thing your boy here could work on is definitely preparation with live streams, like promotion specifically. Okay, so let me share this to some people here, and then we'll get the ball rolling. All right. The screen is frozen, I believe. I'm not sharing anything, so it's not. Nah, it's not really frozen. I'm just not sharing anything. Okay. So, all right. Motivation misery. Interesting. That's an interesting name. Motivation misery. What's the story behind that username? That's cool. That's interesting. That caught my attention. All right, what's up, Corey, David, Carlos, Seth? Oh, you were catching the live stream from earlier today? That's what's up. What up, Brandon? How are you, bro? How's life? All right. Got work in the morning, so I can't watch. All right, cool. Yeah, that makes sense. Well, the good thing for you, and yeah, I'll start to what's it called? Share my screen now. Cool. So the good thing for you, if you are not really able to trade too much in the mornings, this is a good week for Asian session traders because we do have Australian news here in about 3.5 hours. We have yen news in about 4 hours or so. And then tomorrow Asian session, you have a bit more Australian news as well. So back-to-back days with possible opportunities. I won't say that we will for sure get something, but it is looking decent at least. So that's always good. I might, if I have time, I'll take a look at some Australian pairs and see if we can get maybe a something for tonight. I scanned briefly. I didn't see too much, but you guys can let me know. Same here. Been busy in the AM, so I watched the recordings. I can't figure out my MT5, so I can't trade anyways. Yeah, bro, you just need to talk to support. It's a very simple thing. Literally talk to support, and they will guide you. It's not that crazy. A lot of brokers, especially unregulated brokers, eventually have had to get off of MetaTrader because of because they just aren't licensed to trade with them actually, or with due to just some sort of regulatory pressures. So, yeah, most brokers in the U.S. So this is for people in the U.S. They're not going to be using MetaTrader, especially if they're not regulated, because then you're just asking for trouble, to be honest. So, all right, so cool. What's up, what's good? How's everyone feeling? How's everyone feeling after last week's FOMC? So for all my indices traders, all my crypto heads here, how are we feeling after that? I feel like last week was such a big success, like directionally for, at least, I mean, based on what I've been communicating here in the channel, like it's working, it's playing out really nice. So we're up. The market's traveled at least about 10,000 pips since the last big entry zone that we had talked about here, under 53K. So, whether it was portfolio guys, whether it was margin, there's been a lot of opportunities. I really wanted to get wicked into this idea here at 57, 56.5 with Bitcoin. Didn't quite play out that way. But regardless, like, I kept stacking portfolio positions as we kept moving on up. So, yeah, pretty dope. I think the market's traveling pretty well. I think 60K is reasonable for us to get back to, for sure. Maybe even this 57. So I'm not counting that out, and I communicate that so that you're not surprised either if you see prices come down to those areas. It's like when you're expecting something to, like, if there's a possibility for something to happen like that, then there's less impulsive nature, right? There's like less impulsive behavior. So yeah, I mean, portfolio wise, I think at 60 and under is great, especially with how the market now is establishing itself, like week by week by week, guys. I don't know how many weeks you got to see it like this, but when price gets below 60, it's not looking to stay at below 60 for very long, especially not when it's getting below 57, right? We visit these prices, it liquidates buyers, traps sellers, and it just keeps doing the same thing over and over and over again. So strong weekly close again. So yeah, I wouldn't be shocked if we get back here. Like, it really shouldn't be a big surprise. I think we're getting very close to the breakout. We've been building up sellers, right? We've been adding up sellers here for over 6 months. So this should be a banger sometime soon. If anything, if you've been sidelined with these markets, and let's say you just missed all of this, like you just missed all of 2023, and then you started to kind of chase 2024's price action because it started really exciting, right? Then this has been giving plenty of opportunities to kind of reintroduce yourself at different price points. Or if you feel like you got pretty terrible entries, let's say you got caught up buying, at 70K or something, or even above like 65, then you should be getting opportunities to kind of exit those not so great positions, and then give yourself a chance at these lower areas. So this, I mean, there's plenty of choppiness for that to happen. I think that we're getting to a point though soon where if you're not positioned super great, you might not get that exit and then re-entry at a lower level. You might just be better off holding it through and just seeing if you on the pump you take some home. So you do have to be real, guys. Like, be really real with kind of how you position yourself, and then with how you want to exit. Because if you got bad entries, and then you end up seeing some good profits, and you're looking at how the market's moving, like let's say you get that huge spike up with crypto, and we were seeing crypto fly. If you got a pretty bad entry, and the market's also showing you that it could come back to that or lower than your entry, guys, like just pay yourself. Because I just know a lot of people got bad entries. Because I get the message, hey, do you think that we're going to come back here? Do you think we're going to get to these prices again? So if that is you, then I don't think, I think most, depending on how degenerate you are investing, but I think most of what we've seen this year, we will see again. We'll see beyond those prices again. But yeah, I just wanted to share with you guys kind of my thoughts and my perspective on the market overall. I think we'll see Bitcoin again at some point here. I think we'll see it back at 60, maybe even at 57 and change. So those are the key numbers that I would just have alerts set. If you see price there, those are decent dollar cost average plays for sure. Right now, I think we're about to see we could be seeing the mitigation. So there's a huge sell-off on Sunday that then easily and quickly recovered. So we might be seeing a nice little pump here. And then Bitcoin, like, at last is kind of more bearish than alts with recent price action. So right now we're kind of seeing a stronger dip with Bitcoin than other things. So depending on how structure plays out, we just might actually be seeing sell ideas, because there was a very, very strong buy candle right here. Like, these were buy positions. The market pumped right here. So huge pump with Bitcoin starting right around 64K, like a little bit under. So this popped off, and we saw price quickly leave this area. Structure isn't really bearish yet. Like, we're still bullish, so I'm not in love with selling over here. Definitely for portfolio, I'm not interested in any sells. But for like futures or margin trading, whatever you guys are doing, this could play out, especially because it's more bearish than basically any other crypto. Like, we've seen ETH right now, if we're looking at the same structure, ETH is in between that 38.2 and 50% pullback right here, while Bitcoin at the moment it's got a way deeper retracement at the moment. We're chilling at 886, 786. So totally different price action for today, and from yesterday and today with Bitcoin and ETH. So I know we're started on the crypto side of things here first, but yeah, I wanted to open up the space here for this kind of perspective, and for any sort of crypto questions. So we're gonna go over currencies, we're gonna go over indices, a little bit of metals, or really whatever you guys want, and then we'll look at some other things. So let's see, we got Sol. You want to see some thoughts on Sol buys at 130? Sure. Okay, so Solana. Yeah, definitely. Oh yeah. This looks like a typical setup for sure. I know some people wanted Sol under 110. Like, I know this was like a big idea here. I don't know if we're gonna get this. Not with this cycle. This might be left behind for the next cycle. We'll see. I'm not completely sold on this idea, but are you still interested in the NAS setup from earlier? I think it might have played off the zone already, and I think S&P looks better, but I'll get into that soon, Seth, for sure. But yeah, as you pointed out here, Zoe, I like Sol buys really from 133 and under. Like, we had this little move down here, right? A little push below, kind of made some more liquidity. So I wouldn't even be surprised if we actually get below these areas. But with portfolio stuff, I'm okay with just being, a few percentages off. Like, that's fine. And then you have this big spike down here before the market pops off again. This being basically, what we would consider like an order block. Like here, this is very enticing for sellers. When the market is working its way lower, and then you see just a huge push down like that. Yeah, this usually entices sellers, and then this rips. So that is very intentional. This is by design. So I think we could see reversals from 133 and under. From basically anywhere from like 125 to 133. I think we can see this, and from here, this should rip pretty well. I think getting back to getting above this 160 price point is, in my opinion, a no-brainer. We might might get a little difficult with Sol at 180, but I think once we clear this, like once we can trade above 190, then market's pretty efficient outside of that. So the next, I think, push is going to be up into this 225 and then all-time highs. But yeah, I feel like Sol is kind of just destined for all-time highs. And I think this is, honestly, in my opinion, this is one of the easiest like 4 or 5 X's like with very, in my opinion, pretty low risk, just throughout this whole thing. Even now, which is crazy. But also for transparency, like I've been I've been stacking up Sol since basically just all of this, just this whole thing. So yeah, the only good thing that NFTs gave me was Sol during this price point, and I don't even, I mean, I guess it just made sense, but like for example, I sold all of my Sol NFTs. Like I just got rid of everything by December 2022. And then so yeah, got basically a lot of Sol pressed in around 10, 20 bucks, $30. Basically all of this was awesome. And then we just, this was nuts. All of this was crazy. I remember watching this live, like I was like, damn, like, this is really ripping. So anyways, what do you find easier to trade, crypto or currencies? To trade, like to day trade, I think I like indices better than anything. Yeah, because of the level of precision that's required, I like that a little bit better. With futures, hmm, I like I'm a little bit looser on my like my stop losses aren't as tight when I trade crypto, because there's a lot of like little nuances like with between, because Bitcoin might be doing something specifically, but Sol might, kind of move a bit more bearish or a bit more bullish. Let's see here. And so yeah, I'm a little bit like I give it a little bit more space when it comes to crypto, but portfolio, I think cryptos, honestly stocks might be the easiest to see. So it kind of depends. Like yeah, it kind of depends, and it also depends if you're like just trading crypto or stocks and you're going for, kind of like portfolio positions but short term. So like for example, actually this is a good example. Like let's say for example you're looking at Sol and you're seeing, okay, this is kind of an accumulation. I bought Sol here, and then oh look, I'm seeing an imbalance, so I'm gonna take my profits at 150. Cool, you just collected, let's just say from 130 or something to 150, you just collected 15%. So if I think that trading crypto this way is very, very, very easy, and it's not, you're not making those, massive plays, but you are gaining some pretty good movement. Like you're collecting. So depending on how much capital you're working with, um, it's a pretty nice way of stacking up. So if you're working with enough money, it really feels worth it. So like you might, let's say you have like, okay, imagine this, right? Imagine you're making 100K. Like you can just put 100K into a coin. Cool, you put 100K here in 4 days, 2 days, you just did 100K, and then now you're sitting on 120, 115. Collect. Cool, you just made 15K. Even 10K, right? You have 10K at 130, and then you're up 15%. Now a lot of people that don't want that, right? You want the 2x, the 10x, the all that, which is cool, but there's just a different approach, right? You can have different accounts for different things, but you can go from 10K, you're up 15%. Cool, you just made 1,500 bucks. Awesome. Like you don't need everything to be massive meme coin bangers all the time. I think you just have to have a purpose behind your money, and know kind of what your risk is with different things and what game you're playing. Because I think where a lot of people can make mistakes is when you don't really know, am I investing? Am I trading? Am I day trading? Am I intraday trading? So it's really important to just have your exits really determined. Like just be super specific with what your purpose is behind this. So like, okay, am I investing? Is my plan to, am I looking to hold this for a few years or to a specific, higher time frame target? or am I looking to scale in and out of these positions to take advantage of, consolidation? So for example, the people that won, the people that really won the last 9 months, the last 6 months, are the ones that have been just scaling in and out of this. So the people that took buys, profits, pullbacks, like they're just trading inside of the range. Obviously, these are the ones that got the most. Like if you just were buying about at 125 and exiting at, let's just say, 175, that right there, that's 39%, 40%. So even that, imagine this: you had 10K, you got to 180. Now this is from 10K, you're at 14,000. It pulls back to 125 again. Okay, and then you go, okay, well now I got 14,000, and then you just ride this up to 175 again, up another 40%. So now you're seeing, now you're at like 19,600. We'll just say 20K. Pulls back to 125. Okay, you're sitting on that. You take it back up to here, 175 again. You made another 40%. Cool. So now you're at 28K. You bought at 125 again, and then now you're like, all right, well, whenever we get to 175, I guess I'll just get out again. And then now I'll have whatever amount that is. That now you're sitting at almost like 40K. Now, obviously, that's you timing everything out super nice, you reinvesting everything back into the market, or that specific of what you started with. But that's just a perspective on how you can trade. Like, crypto adds up, guys. Like, this adds up. So in reality, because you're working with just more money, and that's kind of the difference here. Like, you gotta okay. So actually, I think I'm gonna break this down for you guys, and you can use this with anything, crypto, stocks, whatever. It doesn't matter. But I want to give you guys this perspective, because I think this might change the way that you maybe approach not all the money you have, but some of it, right? You can have different accounts and different purposes, but you just have to stay organized. But imagine this is the plan, right? Super simple Solana trading plan. This is obviously just a hypothetical strategy, right? So, hypothetical strategy. Because here's what, I don't want people to screenshot this and then be like, oh, this is Mike's plan. This is just, I'm just giving you guys an idea here, right? So keep it super simple. Buy at 125. Sell at 175. Let's say that was the mega epic strategy, right? Rinse and repeat. Okay. So let's say this is the game plan here. Okay. So, and let's say we're going to start with 10K. And this is just, imagine you came up with this in March. I want to show you something and how this can be pretty useful to you. Now, I think we're getting towards the end of this choppiness, and I think like we're going to see some pretty exponential moves. So I wouldn't say this is maybe the best time to continue with the strategy, but I'm just giving you guys perspective for the future. So let's say you start with 10K, right? Start 10K. All right. So again, 125 to 175 is like 40%. So I'm just going to say 40%, right? So this is like roughly basically 40% gains. So, okay. What's 10% of 10,000? 1,000. So, okay. Here, and I'm going to just label how much money we're working with here. So let's say we started this back in March. Okay, back in March, we have here, okay, so you have here 10K. Okay, 10,000. All right, awesome. Then price hits again, hits 175 here. Cool. Now we have 14,000. Sweet. And now we do nothing. So we're chilling. Big chilling here. But now we have 14K and not 10K. So we're up, right? So start. End. So now we're at 14K. Price comes back down, crashes, and boom, we hit 125. Okay, so about, maybe a month later, we're back at 125. So we didn't circle this back. We took profits. Excellent. So now you have, all right, now you have 14,000 over here. Perfect. Market goes up. Ah, here we go. 175. Boom. Actually, we hit it right there. Sweet. So 14,000. And then now you make that 40%. Sweet. Now you're at 19,600. All right. Price comes back. We're back at here. All right. Finally at 125. And here you snipe this one. You're feeling it. You're like, oh, I'm lit. All right. So 19,600. Price is back up. We hit 175 here. Let's just say it happens here. Now again, you're up now 40%. All right, cool. You're at 27,440. Sweet. Price comes back down. Back at 125. Here we go. 27,440. It's a done deal here. I don't know why this disappeared. All right, perfect. And now, for example, and this you've been holding a bit longer. This was from August, whole month and a half. I know, terrible. But then now, on this next move, when price gets back to this level, you're sitting at, so let's say we get here, I don't know, sometime soon. Now you're sitting at 38,416. So you took 10K to 40, basically 40K in a matter of 6 months. And this is not even having the best entries or the best exits. This is just you taking 40% gains. And it was one time, 2 times, 3 times, a 4th time. So you four times you did 40%. Does this sound like something extremely difficult? What do you guys think? I really do want to get your thoughts. And does this give you a little bit more perspective on instead of chasing big, 2x, 10x gains, what if I just collected even 25%, 30% with crypto, which is just really volatile? So this is not really even crazy things. It's just here's the thing. My main point is this. So, and this is again, taking profit once, twice, 3 times, a 4th time. Taking profit just 4 times. You have 38. And obviously this is considering that your plan works and you're trading something that does something like this. So they just add up. But the big thing is this, and this is where I want you guys to understand, is the reason this works so well is because you're actually taking profit. So you're not just cycling back and forth 10K. So now think about this. What would Solana have to do to go for you to go from 10K to basically 40K if you just invested 10? It would have to go to, so for example, from 10K, you'd be at 20K once the market got to 250, right? So once the market then got to 375, you'd be at 30K. And then once the market got to $500, you'd be at 40K. So Sol would have to, for your 10K to go hit 40K, Solana would have to go from 125 to $500. So sometimes that takes way more time. In this case, obviously that's never happened. So we're hoping that something that's never happened happens, which I think will happen. Or in this example, this is a relatively volatile asset. I don't think it's going to disappear. So you can also approach the market like this. And the reason this is so powerful is because you're not working with your 10K anymore, right? You're working with 10K, then 14. With 14, then almost 20. From almost 20, then 27 and change. So it's like your purchasing power is just so much stronger every single time. And so you're accumulating so many more tokens. And so that's why it happens a lot more effectively. So in this example, this strategy is working much better, would work much better than just holding. Now, that's not always the case. You also have to know market cap. But with such a high market cap like this one, this is a top 10 coin, the chances of your money forexing is more likely to happen under these conditions than other ones. And this is just with this. Imagine we held this from 125 to 185 or 190, because 185 is hit more frequently. So imagine you did it, and of course, like, this is with hindsight, right? Like, this is us seeing perfect, like, knowing how things are perfectly going to play out. But imagine if you did 50% every time, 10 to 15, 15 to 22, 500, 22, 500 to 30, like 33. Now you're looking at like almost 50K. So anyways, I just wanted to show you guys, depending on what asset you're working with, like, this can apply really well. The same thing you could approach that with Bitcoin or Ethereum. Someone said something about Filecoin. So, but yeah, here's just an example for you guys, and I hope that this gives you, and you can use different numbers. Like, you have, for example, someone else give me another crypto that you guys like, that you see as a long-term hold, or just any crypto in general. For example, here, let's see, another decent one. Okay, Filecoin. I'll do Filecoin since you already brought it up once. But for example, here, and that's why this is not a perfect strategy by any means, guys, because you can end up getting crushed. Here's an example, right, with Ondo. Let's say you were looking at this and you're like, oh, cool, like, I'm gonna use this similar strategy, and it's going up, and then you're like, okay, well, here it looks like we're getting some pretty good levels at 75 cents. So you go, okay, you know what, 75 cents, when I see 50%, I'm gonna take out, or less. Let's say again, let's say 35%. So then you went up 35%, you took your money out, cool, and you go, okay, well, when we get back to this level, maybe I'll do the same thing. But it didn't get here. It goes up again. Now it finally does, and you got in at 75, but now you're in drawdown all this time. So this strategy is not always going to work. It really depends on what your asset is. And this is something you can do with stocks too. It's something you can do with really anything. So for example, let's say we're looking at ETH. Now ETH has been a good one because it's been pretty choppy. It's been ranging quite a bit. So you could have applied something like this. Let's say you started looking at ETH, and then, I don't know, let's say you were late to the party, right? You saw the all-time highs, the market came back, and you saw 3K. You're like, okay, 3K. At 3K, I wanna see something here. So again, how conservative do you want to be? How do you want to? Do you want to trade inside of ranges? So for example, here you have some pretty good resistance. Here you have some pretty good support. Again, this is basic. This isn't even smart money, anything. Okay, well, when we see the market hit this area, I'm going to take profit. So this would be like 20%. So 3K, you're up 20%, you collect it. So now you go from 10K to 12K. Comes back to your area again here. All right, 3,000. Here again, you could see 20% maybe. Let's see if you get it. Let's see here. All of a sudden, you just miss it, right? It gets close, but you lose all the momentum. So now you're actually in drawdown. So you have to consider these different ideas. Now, what I would say is if you get a big pump like this, I wouldn't let it just go into drawdown. I would probably just collect, get out, and then reinvest. But it just depends on your strategies overall, guys. So I wanted to bring up this mindset just so you can kind of look at how you invest your money through a different lens. It doesn't even have to be the same prices. It can be percentages. So for example, ETH, when ETH pumps, here's an example, right? ETH here, and this is just from the daily. It goes up 18, 20%. Okay, here it makes a new low. This goes up again. Looks like 17%. It makes a new area here, pumps up again. This time, big pump, 35%. It gets up here again. You see this thing goes up like a little bit over 24%. It gets down to here. This pumps up here, another 25%. So if I look at every time and how the market dips down and at least kind of what to expect on the way up, I can see that when ETH makes some pretty aggressive drops, a 15% pullback up is pretty common. So cool. Hey, look, ETH, I looked at this, I backtested all of this, and I see that every time we get a strong pullback on the daily, it'll at least give me 15% in my favor. So cool, that could be a strategy that you have with Ethereum. The big thing is this. You have to, one, know what asset are you trading. Two, what is the behavior of this asset specifically? And three, what are just high probability exits with this specifically? So when you know those things, then you can apply it like that. If you're trading something that's really volatile or it's super small, then you might be it might be better to just let it rip, right, and just let it hold. But with other things, you might be better off just taking a 10%, 15, 20, depending on what it is, depending on the market structure, and then letting it move that way. So I just wanted to give you guys some insight, especially when you're trading with like choppy assets. So I know some of you are into ICP here. This is where I had where I waited for entries with ICP. So I know a lot of people wanted to buy over here, and some of you saw gains and maybe you took profits, which is awesome. But this imbalance to me was just like, I missed out on all of this on purpose in the hopes of seeing these get rebalanced and play out. And in my opinion, I would rather not be a part of the fun than have just late entries. So because there's just so many opportunities, and that's kind of the beauty of not having a scarcity mindset. Like this is over here, I see imbalance. I'm like, all right, I don't need these entries. If the market comes here, then cool, I'll join the party. Otherwise, there's just other things that could have a better positioning. So remember, you don't have to be invested in what everybody else is invested in, and it doesn't even have to be the same market. Like when we saw the markets crash early August, I actually threw a bit more money at stocks than I did at crypto, just because I saw really, really good plays. So like I threw money, and I shared this with you guys here. I threw money at Shopify under $50. And this has outperformed basically almost every crypto. This is up 60% in like 7 or 8 weeks. So, and this, I shared this with you guys too. Now, did anybody else buy Shopify with me? I'd say maybe one of 1,000 people. Because what's the hot target? It's crypto. But for me, it's like, well, what just makes sense? And I saw this as this had the same potential as a lot of tokens. So seeing this just go from 50 to 150, 3x. So this thing is banging right now. Same thing. I mean, I gave you guys, I haven't actually, and I think it's easier with stocks because like they're not really going to disappear. It's pretty hard to like completely fuck it up. Peloton, we're up 50%, over 50% here from $3. Right, and this one, shout out to Mike Sotero, because he brought this to my attention, and then I just entered with my technicals. That's it. But it was like, okay, I see the play here. PayPal, similar situation. We got under $60. This bad boy's up. So it's like you have to. Oh, I didn't even see last week's. Let's go. We up. So, anyways, point is, you got to really create your hone in on your own what works better for you, because if you're holding, if your game plan is hodl, then yeah, you got to live through all of the choppiness. You have to, and it's an easier job. You just do nothing. You just do nothing for a long time. But if you do enjoy the technical analysis, if you're active in with how this moves, and you have a very specific plan, then do that. But you just have to know, the whole point of what I was saying, my whole 30-minute rant here, is knowing what your exits are, right? Knowing the purpose behind your money. What game are you playing? Are you trading? Are you investing? What are your rules based on the asset class, based on the specific asset and its own behavior? Because what might work with SOL, like what we saw, right? Like 40% moves up and down. That might work with SOL, but it doesn't mean it's going to work with anything else. You could have done the same thing here. Like, you could have been like, you know what? When Bitcoin's at 60K, I'm in. And then when Bitcoin's at 66K, I'm out. And that's just 10%. If you did that, you did pretty well the last 6 months here, right? You saw it happen here. So you'd go from 10K to 11, pull back, 11K to 12 and change, pulls back. You see it go again. You got like 1, 2, 3. This happens 4, 5. Right now you'd be waiting. So you'd have already 4 flips. So 10 to 11 and change, 11 and change to like 13. Blah, 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 right? But it depends. This is not as volatile as SOL. SOL, very choppy, but they're big moves. So, yeah. Anyways, that's a lot to say about one idea. So let's move on, okay? And I'm gonna just go straight to the ideas that I know that look good to me. So, first idea that I'm looking forward to here is GBP USD. GU, clean moves. Like, big sweep here. These similar moves happen with AUD USD, NZD USD, Euro USD, but the difference is that GU just has way better structure. So it sweeps the lows, and then it's just been pumping more aggressively. So the chances of GU respecting this structure are just much better. So yeah, I like GBP USD here, and then I'm gonna share this in my Telegram here. So let me pull this up over here. So here, GBP USD right there. If you want to get these, here we go. Okay, so if you guys want to get these, then just go here. There you go. So at some point, once I finish this, then I'll share it there. So GU, basically, I want to get in when these sells get closed and the buys join the party. So that's my take with GBP USD. I have a similar setup with NZD USD and AUD USD. So we'll see. It's possible that AUD USD might be the play too. So it's just a matter of patience and seeing which one of these gets to this zone. For me, it's whichever one gets to the zone last. That's the likelihood that it plays out. So actually, let me move this. Let me move this over here to my other screen. Okay, so GU, AUD USD. There you go. So one of these two. And then the setup that I really like, this one is going to be a swing for me, is USD CHF. This one will be a swing idea. This one could take maybe a week, maybe less to complete. But we've been moving sideways quite a bit, so there's a lot of money trapped in here across the board. So yeah, I mean, every time, and I think it looks better on the daily. But the daily looks just so nice. These are like so good for, you don't get like these accumulation setups so well positioned all the time. So yeah, every time price basically goes under 0.8425, it just loses momentum. So it'll be brief. So I have two entry zones. There's been a lot of support previously before these liquidity captures at 0.8425, 0.8410-ish. So I like two areas here for entries. I'm going to split my risk at these areas. So yeah, this is USD, CHF. This one, to me, I feel good. This is like this is an A grade setup. I think this will play out sometime this week. We have CHF and USD news Thursday. So I wouldn't be shocked if this is when this plays out. But I don't know if it's going to make it that long. I think we might get triggered in sometime soon because we're not very far. We're not very far. There's a lot of liquidity. So maybe we get triggered in during this dollar news here in about 12 hours. We'll see. We'll see what happens. But yeah, that's where I'm at right now with USD CHF here. From here, I'm not in any rush to enter gold positions. There's no sell ideas that I see. There's a buy that at some point I think we can get to. But yeah, here we have retail money. Just built up a ton of it. And then, so gold has been very bullish still. Silver, not so much. Silver right now I think is attacking liquidity, so we might keep pushing a little bit higher. But yeah, gold to me looks like the better setup for buys. We had sell-offs right here before the market completely reversed to end the day, to end the week very bullish. So I think we have some sell positions open, which we can reverse from here with gold. So this might take a bit of time, but yeah, we'll get here. I mean, we're constantly in price discovery right now with gold. So there's just no chill. What with the AUD rate decision in a few hours, that could cause volatility with that decision to take AUD USD before GBP. You're saying, would I still take it even though it would be coming into the zone prior to GBP USD? I don't have enough. I haven't tracked that specific situation often enough. So that's curious because that actually is what happened with Euro. So for example, I have seen it before, but I can't tell you with certainty. So for example, Euro news happened here, London session, like the London session that we just had. So for example, Euro came into this zone. This is the same zone that we want, that I'm waiting for AUD USD, right? Euro and AUD and GU, this mitigation. This was Wednesday's price action. So Euro came into this zone with the news event. So news hits, and then Euro USD gets here, and it gets to this area with the news, and then reverses. So it does mitigate, but this was directly caused by a news event. So the volume and then rejection, right? This whole thing. Cool. So this ended up working. Now it didn't hold really, and maybe it will. Maybe it'll continue bullish, maybe not. But in this example, it would have worked out, right? What I can't tell you, and this is worth definitely for me to go back and find as many scenarios, because it's such a nuanced moment, but that's an example of that working out, of what exactly it is that you're saying right now. So he's saying is, if AU gets to this zone first, but it happens because of this moment, these cash rates here, then should we still take a position like this? So I would be curious to see what you find, because I don't know if that's like the exception to the rule. As of right now, I've seen that happen. So I have seen it work, but I don't know what the actual numbers are over like a big enough sample size. I'm leaning, like, I just feel like that is an exception to the rule. Like, hey, we have AUD news and that brought us straight to this zone. So will it mitigate? And it kind of makes sense because, okay, why are big movements like this happening? This is because smart money comes into the market and out of the market. So if smart money is again in play, if they're definitely making moves, then it kind of makes a lot of sense for that to work. Because it is smart money. So I can see it playing out, but I can't tell you based off of my own personal experience that high impact news events have kind of create that sort of exception. But that is really interesting, and I think I'm definitely going to explore that. But it's cool. That's cool. I like, and these are the things that this is how you get to refine your strategy and your edge more and more, right? You get better. Like, guys, this is what I want you to do this. Like, if you guys have curiosities or you have theories and, oh wait, could this work out or that work out? Don't just go and do it in your trading account. This is the worst thing that people do. It's like they get this idea and instead of like doing the work, okay, seeing if it actually works over a long period of time, over 50 trades or tons of trades, you just start to do it and you're using your own money to just experiment. Whereas you can just go back and see, okay, here are examples of this specific hypothesis, this guess that I have about the market. All right, let's just go put it to test. Like, that's it. Go put it to a test. Go figure out. All right, it's like use, what's it called, the scientific method, the scientific method of trading. So, and that's why in the trading journal, we have that. In the trading journal, we have a section where it's all about backtesting different theories that you have. So I think that's a big part of being a trader and finding your edge is understanding that, like, the way I manage my trades was based off of just this idea, this feeling that I had that it was like, oh wait, this is kind of working. And then I went back and said, oh look, it does, and it saves me a ton of money. Awesome. Same thing with like divergence between correlating pairs and indices. Oh, okay, it looks like my win rate goes up a lot more when I wait for certain things to happen. And then I went back and I looked at tons of trades and I was like, oh, okay, perfect. So, and that's how you build confidence with how you trade, whether it's your entries, your exits, your management, your risk, whatever. It's just by doing that kind of work. But the problem is no one wants to do it. But you can't want the outcome and not do the work. So if you want the output, you got to you need the input. Okay, so moving on. USD CAD. Okay, USD CAD, I didn't take this trade. A lot of people were asking me about this setup, and I know many people took this setup, so shout out to you guys. I just didn't follow my plan. The liquidity down here, I wasn't sold on the buy. Like, had this liquidity not existed, then I would have taken a buy, and I would have taken it right here. Honestly, I might have missed it. I might have taken it like right here. So maybe I would have sniped it because I would have done 1.34875. But either way, besides the point, I didn't take this because of the equal lows. So this liquidity here, it took me out of them. I would rather not. And I have a lot of peace with this because I'm going to take probably 30 to 40 trades in a month anyways. So if this to me looks like a C plus setup because of this liquidity, I'm okay with that. If I took all of the C setups, I would be taking so many trades that I don't need. So I would rather just not be in the market and take a better quality setup based on my system. And so what I said to people that were asking me about this was, hey, like, if you have seen this situation and it's still a profitable setup, then do it. And so I know some of you did take this and you guys, hit your 2Rs, 3Rs or whatever. So good stuff. Some of you maybe are still in it. Your stop loss is break even. At this point, I would not be exposed to any risk if I wasn't. I'll say that much. Now what I'm curious about is possible sell scenarios, because here we have two set situations. We have the liquidity capture up here and the drop. We don't get back to close this buy position, so this is definitely still chilling right here. And then right now I'm not fully committed to selling here yet, because we did liquidate tons of buyers. We work our way down to these areas, so we trade below here for a few hours, but the market comes right back up. So I'm curious to see if this is going to be a continuation and we get to here. This I will sell. When market gets up to here, I will sell here. Right now, I want to see, is the price action that we're seeing, is this range, was this drop more for bearish structure to confirm lower lows, or was this more to liquidate buyers, trap sellers, and then continue on? So I'm going to just kind of see how price settles going into New York session before making a decision on if I want to sell this. Also, we have this bearish trend line right here. So there's retail selling here, here, here. So I'm kind of curious to see if we're going to just clear all this liquidity anyways. At the moment, I feel like I'm not going to end up selling here, and I'm just going to wait for this. But I will reevaluate as time goes on here. This kind of actually looks like a shakeout play to me, which is basically when the market creates a break and retest situation, and then it's just luring in sellers again just for this to rip. So I could see that happening as well, but the only reason, again, going back, is this liquidity. There is incentive for price to go below 1.3465, and it's because there's retail money right there. So decisions. But the best part is, if you don't have clarity, you don't have to enter the market. It's that simple. You don't have to. It's awesome. You can just find a better chance. Okay, so that's basically it for currencies, metals, natural gas going crazy still. A bit of Bitcoin, a little bit of crypto talk, a bit of crypto talk, and then wow, the oil play ended up happening, huh? This is a whole complicated mess because it didn't really give this type of structure. It only did it with this data feed. It looked totally different with other ones. Can someone send me the ticker for the futures, for oil and on futures? I'm really mainly looking at Seth here. I know he I think it's like MCL or something like that. I don't trade oil enough to remember, but I think it's MCL. Yeah, it is. Okay. So, for example, here, this looks so different. How much is this delayed? The data, 10 minutes? Okay. So, yeah, so we end up seeing a completely different environment than what we saw with the market on CFDs, at least with this broker. It looks a lot different. So, but now it looks kind of interesting. So here it kind of is doing distribution, et cetera, et cetera. But when we look at how oil is playing out now, then we can see, okay, is this now giving a better opportunity for sales? And it's the same situation here. We see a pump during New York Open. This clears up some liquidity, comes crashing down towards, as the first half of the New York session ends. And then the second half of New York session kind of brings the market back up. So this now brings us to a different point, which is what was the purpose of the drop? Was this to just liquidate and then continue our trend? Because we are bullish. Market is bullish right now. And there's more imbalance up here. So was that the move? Because the 4-hour ends up closing, leaving a lot of behind. The daily here ends up closing up here as well. So I don't love how price ends up coming back. To me, this is looking like price didn't just get low here and just, we trade down here and it's cool. And we came back up real quick. So it looked like the purpose behind this drop for oil was more to liquidate rather than to establish a downtrend. So I won't be involved in this unless we come back and then we just keep trading lower. But if we get back up here soon, then I'm chilling. I don't need this trade. Okay. And then basically, guys, you do have Australian news here in about 3.5 hours, 2.5 hours. So I looked at a whole bunch of these Australian pairs, and honestly, like, the market just looks boring. I don't see any setups here. It's just not. It's not screaming anything for me. Nothing's. Only AUD USD. And I don't even know if we'd get all the way down there. That's quite the drop, but we'll see. I mean, it's cash right here, so interest rates, big decisions. The next release is like right around elections for Australia too, but right now things are forecasted to kind of just stay the same, and it's just been the same. So we'll see. Like, Australian dollar interest rates have been the same all year. But if US is dropped, and you can see like the timing of this is pretty similar. Australia ends up raising their rates a couple months after. Usually it looks like they follow US's approach. Not always, but because a lot of the markets are really tied back to the dollar anyways, just like overall how the global economies work. So I wouldn't be shocked if we start to see this to drop, but I don't think it's going to happen right away. So this might just be another even interest rate, and if it is the case, then this might not be too exciting. It still probably will create some movement. You can look back at the previous one. So for example, the last one of these that we had was on August 6th, I think. Where is this thing? Yeah, August 6th. So we can look at August 6th and see what kind of volatility that brought to the market. Oh, never mind. I thought it was this huge drop. I was like, oh, okay, then maybe it is worth it. So August 6th. And we have somewhere around here, I think, is where this happened. Yeah. Okay. So a bit of volatility, but nothing too crazy. So we'll see. Australia's reserve will be doing their thing. Reserve Bank of Australia. So we'll see what happens, but yeah, I think, in my opinion, I think today is going to set up for tomorrow. Because tomorrow AUD has CPI. So that should also be a pretty good news event for the dollar. But cool, guys. We'll wrap it up there. Hopefully you all learned something today and got some value. If you did, then, support the channel. And most importantly, just keep showing up to the live sessions that we do in the mornings, guys. That's where we get so much value, so much just real-time, like, entry, exits, management. You guys can see how to manage emotions too. So remember, the sessions during New York, those are the ones that are really going to build you up on top of the psychology sessions every Sunday. So keep showing up, guys. If you're a member of the community, then I'll see you guys in Mexico. And otherwise, there's a couple of things in store for you guys. And then if you want to see some of these charts, then I did drop the link to my Telegram. I'll pin it right here so you guys can get those whenever. All right. Peace out, guys. Have an amazing rest of your night. Stay disciplined. And I'll see you again same time next week. Peace out.